So, chat. I would like you to know that this is clearly just a ladder attack. Just a ladder attack. It's the hedge funds. They're manufacturing it. It'll be back. Don't worry. Hold diamond hands. By the way, is anybody looking for purchasing some GameStop call option? Is anyone looking to buy some games? I'm not selling. I'm just wondering if any of you are also buyers, because I'm a buyer, but I'm looking for other buyers so that we could talk to one another. I've just heard of this one guy and he's selling them, and I don't have them, but there's this guy out there selling them. This is definitely a ladder attack. Now, chat, look. I'm not saying it's a crash, but I should have shorted yesterday at 300. Listen, chat, I can't give you any advice. I can't give you any advice here. But what I will say is, if you were watching the stream the past 5-6 days, you knew what to do. LMAO and all the people that have talked bad shit about MLM scams, trying to get everyone to buy AMC at GameStop. How's AMC doing? AMC has more institutional interest in seeing the stock go higher. So, oh. And I want to say that, listen. I want you to look at this, and I want you to look at this, and I want you to go, when we were in the middle of the bubble, what were people saying and doing? Okay? What were people saying and doing in the middle of the bubble? That is what you need to do. Go and look, find it before they delete it, and go and see what they're doing. I'm leaving everything I said up. Nothing I said is going to be deleted. You can see exactly what I said when I said it. Go look at the price of GME when I said it and tell me how I did. I'm going to go and create something that's like a quick minute or two about shit I was saying about this. So on January 30th, I said the short squeeze for GME never comes. That was the announcement of this stream. Let's go over to our friend over at January 30th. That was the day after January. Huh. If you had listened to me on Saturday, so it was Saturday the 30th, I said the short squeeze never came. People were like, Mike, no, you have to understand. It's going to happen. It's going to happen on Monday. Okay, dude. Then I explained how that's not the case. If you had listened to me, so you are giving it. No, I'm not giving advice. I'm saying listen to the information that I am putting out. Not instructions or advice specific to you. Come on, folks. Let's see. What else did I say? I looked more at AMC's financial situation, and holy shit, is that a dog shit company? They had corporate bonds at 14% interest rates. Even after improving their balance sheet by $1 billion from this pump, they are still in deep trouble. Hilarious to watch shorts get fucked. Now, you know who's not getting fucked right now? The shorts. Oof. How's Doge doing? How's the Doge doing? Elon Musk says Dogecoin tweets are jokes. 20 hours ago, they said the Dogecoin was, ooh. So what have we learned? And and if you listen to Michael Burry, Mike Burry sold his GameStop shares. Michael Burry compared GameStop to the Big Short and said he would cash out if he won big on the stock. If you listen to him, he posted that yesterday. You might have been able to sell somewhere about 250. If you had made a bunch of money and were still in and listened to Michael Burry, you would have saved yourself 59%. It's down to $91 now. Chat, this is not an attack. This is stock. I tried to show you this so much. I tried to show you this because this is how it works every time. We had this the past 3 days. Now we're here. Now we're in the capitulation period. Wait till we get to despair. We're not in despair yet. Despair, ladies and gentlemen, will be down at $40. Well, that's what the goal of making money. Some of the people holding the stock is to stick it to the man. Not saying it's a good idea, but that's what they're doing. Okay, if you're using your money to stick it to the man by making them richer, are you sticking it to the man? Can you explain naked shorts? I don't understand how they are created. Basically, the idea is that you sell a share that you don't actually have possession of. So you exchange not a fugazi, a fake, a pixie dust in exchange for real money. And when the person goes to take possession of the shares, it turns out that doesn't exist. And then the person that sold the naked short is responsible for getting them a share of stock. Now, if the share of stock went lower, they could just go out to the market and buy it. So the fact that they weren't able to get actual possession of a stock by borrowing, if they sell you the stock short naked first and the stock goes lower, then they could turn around and take your money and buy the stock from the market and then give you the stock that they sold short, quote, but without actually borrowing it first. So when you actually go and try to get delivery of the stock, they have your cash and they can use it to buy it from the market. That is what a naked short is. Once we hit despair, do those that shorted a share still make money? If we hit despair, then they'll buy back because they've made their money. Mark Cuban on GME, your thoughts. Okay, hold on. All right, here's what Mark Cuban says. Supply and demand, but in this case, it literally could be because the source of demand has been crippled. With Robinhood shut it down, then cut it back. Let's put aside why. They cut of the greatest source of demand. They created a Robinhood dive. No Robinhood buyers means sellers lower their price to find buyers. They keep lowering it until they find buyers. Keep the most natural buyers out of the market and the price keeps on falling. Then that drop accelerates because the more the stock falls, the more owners who bought on margin get margin calls. When that margin call happens, it's brutal. They just take your stock, send you a fuck you note, and sell your stock at the market price no matter how low. They just want to get your cash to pay back the loan. Then that accelerates the selling, which then leads to what we are seeing in the market right now with GME in particular. So what do? If you could afford to hold the stock, you hold. I don't own it, but that's what I would do. Okay, Mark Cuban is brain dead. I am not giving you any advice at all. At all. At all. But this is a bubble pop. The fair market value of GME. So if we look at the stock market chart, you see that takeoff period? That takeoff period was around January 12th. There was kind of a gradual growth where it was making, it was hovering around $20. And then January 12th, all of a sudden there was that takeoff. So fair market value is probably somewhere in the range of $15, $20. If you bought GameStop anywhere above $15 or $20, you're not going to make any fucking money off this thing. That's just an opinion, not advice. That is not advice. This is my personal opinion. I have no position in GME. I make no money if it goes up. I make no money if it goes down. But when you see a crash happening, which is what we're in the middle of, so this is just, this is asshole opinion. What? It depends on what you bought it at. Also, if you bought it at 20 and you could sell it at 90, you fucking sell it at 90. Why? Because Robinhood and the other online brokers open it back up to buyers, then we will see what WallStreetBets is really made of. That's when you need to make it all work. I have no doubt that there are funds and big players who have shorted this stock again, thinking they are smarter than everyone at WallStreetBets. They are. I know you're going to hate this, but the lower it goes, the more powerful WallStreetBets can be stepping up to buy the stock again. The only question is, what broker do you use? Do you stay with Robinhood, who is going to have the same liquidity problems over and over again? Or do you go as a group, find a broker with far, far better balance sheet that won't cut you off and then go ham on Wall Street? See, here's the thing that Mark Cuban doesn't understand. The reason why these people picked Robinhood is because they don't have the money necessary to actually have a real investment account. They don't have the $5,000 or whatever a typical investment account broker requires you to open an account. They have like a couple $100, and they were just gambling it on the most gambly option possible so that they could ever get a return worth a damn. So they can't leave Robinhood and similar shit apps because they don't have the money. Because there ain't much money at WallStreetBets. Okay? It's a pump scheme. It's a place where you go pump idiots. You make your trade and then you go post it on WallStreetBets. Now it's the pump and dumper's dream. It's the pump and dumper dream. You go find a stock, you buy it, and then you go and post some long evangelical, drivel on WallStreetBets and hope it takes off. And you keep doing it until one of them actually spikes, and then you make your $1 million. This is one of the oldest scams in the book. I'm losing a lot of respect for Mark Cuban for this dumbass post. What a dumbass post. Because Robinhood, all the big ones don't have the balance requirements now, though. WallStreetBets is on to identify the next one to squeeze, but isn't going to be the widely publicized right now because it's going to be time for when the short options expire, not willy-nilly when traders want. You had respect? No, I didn't. Okay. So this is it's hilarious. It's smooth. We should go to Yahoo here. God, man, look, this is more volatile than Bitcoin. This is such a shit pile. Here's a good article on the why of Mike Berry's original investment. WallStreetBets pumping GME just allowed Mike Berry's investment to pay off way greater than he ever imagined. I'm not defending GME being at what it is. It probably belongs where it was at before the pump, but IMO, the short was wrong. The short was wrong at the time, but now the short is right. Jesus. Oof. By the way, the volume isn't even low. What are people talking about? The volume isn't even low. It's not as high as it was during the most ridiculous part of the pump. Yeah, the short is making gangbusters right now. You were saying about these people unable to trade anywhere else. Robinhood app downloads soared despite trading restrictions. Too big to fail. They won. We commoners lost. Next battle. Yeah. Man, I want to trade alongside these people. They've got a lot of conviction. Man. I really could start my own stock channel. If I wasn't a lefty, I could easily make my own stock channel and it would actually be good. As opposed to the stock guy and all the dumbass shit he's doing. God, he's a fucking moron. One tweet with 2 likes doesn't represent everybody. You know what represents everybody? Negative 64.6% in an hour and 15 minutes. Not sure what the point is continuing to cover this stuff. Some people made money off a hedge bet being stupid, and it was hilarious. Good for them. Now, stupid people are falling too late. Not sure why it's funny that those uninformed and likely desperate people are now getting screwed. Because what's funny about it is how arrogant so many people were when I was trying to explain how this made no sense, that it was a bubble. And I have to show the part where it crashes because we just spiked again. We bounced off the bottom, chat. We hit a wall. Somebody's making a stand at 85. I have to show it because it would be cowardly of me to not show it. What would have had to have happened for you to participate in GME hold? Nothing. I had no conviction on the bet. I didn't believe in it. I thought that any squeeze already happened that was going to happen. You remember when Melvin said they bought out and closed their position? They probably were telling the truth, which explains why it went to $400 or whatever it spiked to. I think it was spiked to 483. So Melvin was telling the truth. You got your short squeeze, and everyone was so greedy. They stayed in until hedge funders could rotate in and pound this stock lower and make money off of you. And anybody who bought at 350 or who entered the trade at 350 was crazy. The bet went from $20 to 450. The only arrogant ones are who the fools who thought it would keep going. Exactly. Yeah, the stock I came across as a moron talking about the stock market with Destiny, which was hilarious. I can't believe AOC had that moron on her stream. Absolutely. I didn't watch it because I listened to about 5 minutes of him talking on AOC and I was molding in my Discord because of how dumb he is. Just about 20 shares. Let's go. I mean, hey, well, it looks like that $85 fight back got crushed. How low can we go? How low can we go? How low can we go? So despair would be if it dropped down to like $10. How low could we go? How low could we go? You were molding in Hassan's Discord too? Yeah, because it was fucking stupid. He was a dumbass. This is horrible, actually. A lot of people think Wall Street Bets are good guys, which I can assure you they are not. Oh, yes, that's what I've been saying. I had to fight back when I was like, Wall Street Bets is 4chan. Wall Street Bets are right-wingers. Wall Street Bets don't believe in leftism. Wall Street Bets don't care about defeating hedge funders. Wall Street Bets just wants to be rich. They don't care about you. They care about themselves. They're just upper middle class basement dwellers who bought the fucking stock market bullshit and they want it, and they're gambling addicts. That's it. There is no greater purpose here. There is no like higher calling to defeat the hedge funds. There were hedge funds on their side of the trade. There were rich people that agreed with their side of the trade. So they were never the good guys. Whoa, hey, some of them are just bored finance bros who like memes. They like memes like with ableist and homophobic slurs. Can we acknowledge how close the actual chart is to your model? It's like identical. Because I've seen a bubble before. Here's another one. Here's the VW short squeeze chart. Here's an actual example. Volkswagen had a short squeeze. Look at it. Same shit. Here's what you need to understand about this society. This is why leftism will serve you much better than, you know, some self-help bullshit about gambling on short expiring options. The system is rigged for the wealthy against you. High-frequency trading firms get your orders before you do so they can buy the stock you tried to buy and turn around and flip it to you for a few cents profit in a millisecond. You are a fucking dope. You are the person they take advantage of. And the only reason why anybody's making money in the stock market right now is because there's a Federal Reserve put. The Fed is pumping infinite money into Wall Street. They're buying dogshit corporate bonds. The federal funds rate is 0%, and they are pumping this market to keep it afloat. We just put $4 trillion in COVID relief to the rich, while you dipshits got a $1,200 check and a $600 check. The game is rigged against you. Now, can it go on forever? I don't know. Markets can remain irrational longer than I remain solvent. But I can tell you right now, we are in a 1929-esque bubble. And it's crazy talk. I mean, Tesla, this is a story I was just laughing at this morning. On my Twitter account, !Twitter. Tesla has to recall 135,000 of their vehicles. They've made about 1.3 million. So that's roughly 10% of their vehicles have to be recalled. All the vehicles they've ever made, 10% are being recalled. And this company is worth more than the next 9 manufacturers of vehicles in the world combined. They made 1 million vehicles, around 1 million vehicles ever. Those other 9 manufacturers made 80 million last year. And Elon Musk is the richest man in the world. The only reason they made money, Tesla, is because they were able to sell carbon credits to other companies. There was a federal carbon credits program. They were able to sell 2 billion of carbon credits to their 700 million they made selling cars. The company's worth 800 billion. They made 700 million selling cars. That means if they sold cars for 100 years, that's their current they're trading at 1500 PE. That's what we like to call a bubble, folks. But Mike, can you play Cyberpunk in your Tesla? Oh yeah. This is a pump, but the hedge funders are doing it. So it's fine. The hedge funders are doing this pump. Wait, are you really telling me that in 1 year Tesla went from being, $100 a share to $900 a share? They recall. This is amazing. They recall 10% of all the cars they've ever made, and they went up 4%. Mike, it's a touchscreen failure recall. They have to repair them. Car manufacturers have to recall millions of old-ass cars to fix shit all the time. Nothing specific to Tesla. Not saying Tesla isn't over. No, I understand that. But I'm talking about the scale of the recall. The scale of the recall versus their total manufactured car. That's an astonishing number. Tesla stocks recent. Let's read this Motley Fool post. Tesla stock's recent wild run isn't sustainable, but here's a counter argument for. One analyst said this week there's plenty of excitement ahead for Tesla. Indeed, shares could rise to 1,200 in the next 12 months. He predicts that would translate to an incredible 43% gain from the stock's closing price on Monday. How could Tesla's stock be worth that much? It boils down to some enormous long-term expectations for the company's growth. Nice typo. Wow. I'm definitely going to put my savings into this guy. Tesla's annual vehicle deliveries to rise from 500,000 last year to 894,000 this year and 5 million by 2024. By 2030, annual deliveries could climb to about what? Sandler is betting on nothing short of a electric vehicle revolution. He knows that it's Joe Biden in the office, right? This is babble, chat. He sees Tesla generating 37 billion of free cash flow annually by 2025. All right, chat. I believe we may be in what's known as a bubble. Tesla will need to start demonstrating substantial progress toward enabling its vehicles to drive themselves. Holy hell, dude. I'm laughing, but it doesn't matter if I think it's laughable and stupid. All that matters is what it bids at. Oh, look! The fight back has begun. The fight back has begun, chat. The fight back has begun. We're off those $80 lows. We're up to $98 again. Wow. We found some buyers at 80. This is not Tulip Mania. The best DD pointed to historical short positions on an already undervalued stock. This is a smart strategy played by hedge funds regularly. I think that Tesla was definitely over-shorted, but now it's at GME level territory. I just need to ride the GME roller coaster just to feel alive again. I have a friend that invested in Tesla a while back. I keep telling him to get out now while he's made money, but his bum ass is convinced that it's not a bubble. It's just going to keep getting better. Can't wait till it pops. So angry. What I would say is that scene from Wolf of Wall Street where they talk about it being on paper, that is how people think. They don't think. Now, if you actually listen to prudent financial advice, they would tell you that if one of your stocks really rises and goes increases in value, that you should sell it, some of it, and reposition that money in other more secure investments. You shouldn't allow one segment of your portfolio to balloon out of control. That you should constantly be rotating, and you should constantly be looking to lock in big gains. Now, if I had, because buying 10%, like when you bought Tesla, say you put 10% of your portfolio in it, and then it balloons in value where it's now 60% of your portfolio, would you put 60% of your money in one stock that had already gone up 10 times? And the answer is probably not. So if you are one of those people that did get that big win, you should sell a portion of it. This is a generalized advice, portfolio advice, not for you in particular. I'm not giving any of you advice what to do on your own investments. I'm just talking about these strategies generally. That is what they would tell you to do. That's what a prudent advisor would do. Now, maybe you stay in Tesla and you never sell. I mean, we are in a world historical bubble in equities. The last time we had a stock market that was trading this high was 1929 and right before the dot-com bubble burst. Does that mean it has to burst? These are all the meme stocks, by the way. These are all the meme stocks. All investing does is siphon money to the mega rich in the form of fees. No matter what, you will not be able to afford life medical costs. Always cost more than everything you made in your entire life. EVs won't save the environment. We need better public transportation, and we need affordable housing so people don't need to commute 2 hours to work. Yes, that's what would make sense, wouldn't it? I think electric vehicles will be necessary, right? We want to electrify transportation as much as we can. But the idea that Tesla is going to be making $57 billion in 10 years is like comically funny. Mike doesn't have diamond hands. It's okay, buddy. We could work on it. Oh my God. I know you're memeing, but like people are actually trading their life savings on memes of 2 emojis. They're trading their life savings on 2 emojis. And like, goddamn, that's sad. That is sad as fuck. Welcome to the power of memes. I'm aware of the power of memes. I bought it into GME, only money I could afford to throw away. I don't understand why people trade money like they can't afford to lose. I mean, when does weed go on the stock market? When is it federally decriminalized? I know that there's an effort going on to do that right now. Good diagram of short ladders. Oh God, I can't wait for this story. I'm going to show you something. This is what we like to call propaganda. Okay? This is how you do propaganda. So what you do is you describe something that did in fact happen. Shares were sold. Then you put a pink border around it, a big arrow. You put the total value of the trade, and then in big black text, you put attack. And now everybody goes, oh, it's not the stock trading lower. It's an attack. Now, notice what's severely lacking here. Any evidence. All you have here are shares being sold on the stock market. Quell surprise. Somebody is selling shares on the stock market. In the middle of a crash, a lot of people are selling a bunch of shares on the stock market. That is not proof of anything. You are looking at a chart during a crash. That's what they look like. Somebody with a lot of shares goes, well, looks like musical chairs has stopped. I'm grabbing a chair. And they liquidate their position at the market. That's it. This is not evidence of shit. And if this was an attack, I'm sorry. You don't know that just by looking at the chart. You can't. Breathing each other's lives, holding in this mind that if we fall, we all fall alone. Doesn't Citadel batch buy sales from brokers like Robinhood, which would explain the batching? I mean, who cares? That's not evidence of shit. It's called propaganda. That's all that is. It's just made up. Can the government do anything to prevent the stock market crash like the one in 1929? Yes, there's a bunch of things they can do, but it can still happen. It's called a short ladder attack, my guy. Look it up. I think you need to get on the short. Never mind, I'm not going to be ableist. Not going to be ableist. You almost got me to be ableist. You almost got me to be ableist. But I'm not going to be. I'm not going to be. I almost did. I pulled it back. Hey, Mike, you've convinced me. I sold. Okay. God damn it. Don't make any trades based on what I say. So I guess your diagram of a bubble is just neutral information. It is, yeah. This is my opinion that GME, GameStop, which lost $4.22 a share, should probably not be making its all-time high in the middle of a pandemic. I don't know. That's just my opinion, man. Mike, there is a concerted effort to fuck the little guys, but yes, you're correct that Wall Street bet types are overblowing exactly what's happening. Also, people are gambling life savings because millennials and Zoomers will never have a chance because boomers fucked our country. What's really funny is that I was told there was going to be a short squeeze on Friday. Never happened. Then I was told it was this week. The stock has gone down $220 a share in the last 2 days. So, and now suddenly all the hedge funds had a bunch of shares to sell. I thought they were short sold to the hilt. I thought they were ready. I thought it was ready for a big old pop. Now suddenly there's enough extra shares lying around for 250 million in a ladder attack to happen. I thought all these hedge funds were totally levered to the hilt and fucked by the wall. See how they move around with bullshit terminology? And then they get somebody to start repeating ladder attack, ladder attack, ladder attack. And it's like, wait, okay, so they aren't ready to get squeezed. They aren't ready to get squeezed. So the squeeze is not on, actually. Two hours in, Mike is still shitting on people and loving on hedge funds. At no point did I love on hedge funds. I told people that this was a bubble and to protect themselves. And here we have a bubble popping, and people have the fucking balls to come in here and pretend come on, man. I told an email to my financial advisor at Fidelity and told him to fuck off. I'm only listening and following your advice, Mike. Thank you. Thank you, John. I am not your financial advisor. I have no fiduciary duty to you. Thank you for the reminder for me to say that. Why are you rooting for billionaires? Oh my goodness gracious. Whoever rotted your brains by thinking that a stock market thing is there's only one thing about a stock market trade, chat. It's you. That's the only person. That's it. The conservative effort isn't to fuck the little guy, it's to enrich the big guy. The little guy is the victim of circumstance. That's capitalism. Did the diamond hands come up there with that? Yes, basically. It comes from a phrase, weak hands. It's a poker term for when you don't have the goods and you make a bluff, weak hands will fold and you'll win the pot even though you had nothing. Now people are saying they are diamond hands and they will never fold. By the way, anybody telling you to be a diamond hand is making you you know, I know all of you know this, but anybody telling you that you should never sell something is probably the type of person that's fucking you over. And when people know you never fold, they fuck you over. Yeah, you know what they do when you never fold? They wait till they have a big hand. They have the nuts, as it's called in poker. Or the pure nuts. The pure nuts is the best possible hand you could have. Right? So if you got the pure nuts and you know somebody's a calling station, that's what a diamond hand is. You raise them their whole stack and you win it all. So being a diamond hand is an exploitable strategy. Oh no, object. I guess they don't want to show the number of people that are on, huh? Hardcore laddering. They just say laddering, chat. Just say laddering. Just say laddering and you don't have to prove anything. You can get dupes to follow you. Guys, this only works if we all work together. Buy the dip and hold. For all of us. The movement isn't over. Balls of steel. Let's go. For all of us. Not for any one of us. We can do this. My 102-year-old grandmother bought GME in August 1995. Wow. Hey chat. Hey chat. It's just the bear trap. Chat, it's just the bear trap right now. This is the bear trap. Listen, I am not above laughing at people. I'm not above laughing at stupidity. If you wanted the perma nice streamer, this is definitely not the stream for that. That is your browser mic. 573 are on. GME is rising. GME is rising. It's coming back. We're back. We're coming back. We're coming back. Oh, it's coming back. They've wow, they've pushed it up 40 points higher on the day, or on the since the lows. They're still down 105 for the day, but they're fighting back. They're fighting back. Hey, did they do that at any point in the previous days? Yeah, actually, they did. They did do that. It was the stock yesterday that got to it bought back. It got up to 11:15 a.m. That's the peak of the fight back, and then it started trailing off again. They started fighting back too back on Thursday at around 11:15. They got a nice spike. There's something about that lunchtime crowd. That lunchtime crowd. And then it trails off from the lunchtime crowd. Tesla receives regulatory credits for free. They're able to sell them at 100% profit margins, which boosts the company's overall margins. Tesla makes more selling regulatory credits than they make selling cars by a lot. Yes, I know that. You think people went on CNBC to tell people to go on the forums was a dog whistle for them to go on and post propaganda like diamond hands and such, or is it bad advice we're seeing? All I know is there's nothing about this that has anything to do with anything but gambling. This is 100% gambling. Everything else around it is bullshit. Nobody knows if it's going up. Nobody knows what the short positions of the hedge funds are. It's not tradable information. Nobody knows what positions people are actually making at the time. There is no transparency. We're not sure. All we know is GameStop is a shit company that loses money. Now, are you going to go long on a shit company that loses money based on some sort of bullshit trading theory? That's gambling. That's gambling. If you want to do it, gamble away. But it ain't investing. A lot of American day traders sell everything off before they go to lunch, so there's often a stock dip around that time. You gotta know when to hold them, when to fold them, when to walk away, know when to run. People don't realize that right now, since the surge is over, any hedge funds and institutions can warehouse their losses indefinitely and wait out these moronic long holders. They're demising themselves into thinking they're in an actual fight. It went from 80 to 120 during your stream. Thanks, Mike. You're welcome. You're welcome. You're welcome. Okay, chat. It started off the day at 155. Do you think we're going to cross into green territory for the day? Well, actually, it opened at 155. It closed yesterday at 225. So you think we'll get back up to green on the day? 225 is green. It would be green on the day. Anyone who says these meme stocks are not gambling is a liar. The market is not normal right now, and I feel like a lot of people who don't know what they're doing. AMC to the moon, though, baby. Well, all the meme stocks are getting crushed right now. Genuine question. Why would trading apps halt buying when stocks jump, but radio silence when they start to tank? Why stop the rise but allow the dip? No. Only retail traders can sell. Hedge funds can buy and sell. That's wrong, don't you think? Yes, the hedge funders aren't buying through... They aren't buying through Robinhood, though. So Robinhood, you have what's known as institutional risk. Whenever you have a bank, you have what's known as institutional risk. What's institutional risk, Mike? It is the risk that the place that you're trusting your money fails. In other words, when you put money into a bank account, it says $100,000 in your bank account. You don't actually have $100,000 in your bank account. What you have is a liability on the bank's balance sheet to you for $100,000. And as long as the bank remains solvent, you can go and access your money, and it feels like you have $100,000 in there. But if the bank goes belly up, for example, during a bank run or some other institutional losses, your money goes poof because it never really existed there in the first place. So, institutional risk is a serious problem. So when you put your money in your Robinhood account, it's not really there. The cash is part of Robinhood's assets, and then your entry is just another liability with all their other liabilities. So on net, if the company's liabilities exceed its assets, like the cash, the total cash that they have, which includes your cash, then you get fucked. Now, in America, we have what's known as the FDIC, the Federal Deposit Insurance Corporation, where the federal government will step in and guarantee all of the deposits up to a certain level. I think it's what, 250? Is it 250 FDIC insurance? FDIC insurance. 200 number amount. Yeah. Is it 250? Yeah, 250,000 per depositor. Now, if you have $300,000 in a bank and the bank fails, you lose $50,000. So institutional risk is something that you always have to be aware of. Oh, the pop is back. Oh my gosh. Okay, so the open for the day, it opened at 155. I'm sorry, it opened at 140.76. So if we can get to 140, it'll be positive from the open. Now, the open was down from 225 the previous day on Monday. So the candle will turn green for the day. It'll be gapped down with the green candle if it gets above 140. Why is that a problem for the Robinhood customers? Webull, Fidelity, other brokers aren't having those issues. Sounds like liquidity issue. No? Yes. Wow, Mike, can I suspend my subscription until you stop giving unsolicited financial... Oh, okay, Dr. Dragon Rider. All right, well, we will come back to laughing at the bubble stocks and the incredible stupidity of the American stock market. Why is crude at 54? Why is crude at 54? Oil, the snowstorm? OPEC expects deep output cuts will keep the global oil market in deficit throughout the year, even though the producer Group has revised down 2021 demand growth. OPEC and its allies can celebrate their success in buoying world oil markets. Okay, so they cut oil production. Wow. All right, we're done with the financial stuff. Yeah, no mention from Mike about how the hedges are cheating and what's the reason for the stocks crashing down today. It was so bad for the New York Stock Exchange has stopped all shorting on these stocks because of them. Oh, no, I mean, listen, the hedge funders are 100% cheating. Are you shitting me? Of course they're cheating. That's why they bribe all those politicians. Mark Cuban live on... Oh, God, I can't wait. I want to maul over this.
They have generated the
Going on, CNBC. Come on, CNBC. What's going on?
I'm saying is, what do you actually own when you own a share of stock in Apple? Well, Apple pays a dividend in a non-dividend paying share stock. What rights do you have as a shareholder when you own a share of a company that doesn't pay a dividend? If that company has a lot of discounted cash flow, are they actually, and they don't pay dividends, and they're not growing, and they're not investing, maybe they buy some shares of stock back. Maybe they issue more options for their executives. But what do you truly own? There was a point in time, back in the day when you owned a share of stock, you felt like you were an owner of the company. Now they have multiple classes of stock. You don't really own anything. What you own is the right to sell it to somebody else. It is effectively a digital representation of a share of stock that gives you the right to sell it or to buy it from somebody else. And it's
so you're saying that changes in. All right. So you're saying that changes in ownership structure. I mean, you're not no longer a shareholder. You just hold a trading instrument. I mean, that's sort of a dark view of.
It's not a dark view at all. I mean, look, if you go back to my blog post from the early 2000s, I said the exact same thing. Right? I haven't changed my position in all these years. And supply and demand matters. Why do you think that, brokerages have analysts that go out and make calls and go out on CNBC and come on and talk about the calls that they've made and the things that they see happening? They want to create demand. I mean, the reality is they shouldn't. If it was truly about ownership in the company, no analyst should go out there and say anything because you want the stock to stay as low as possible so you can own more. Right? It's
well, I mean, whether
there we go. We're
a Reddit trader or
we're at the highs of the
trader,
day.
You crave research, Mark, and that's what the banks sell. That's what analysts sell. There's value in that.
No, I'm not saying there's not value in it, but I'm saying if I'm a client of your research firm and I pay you for that, great. But when you go
what
on
Mark is talking about here. What Mark is talking about here is basically that the ownership equity that you get in stocks today isn't have anything to do with control of the company. And that these common stocks really don't represent any access to the capital that the underlying company. They don't give dividends, which is real money going to shareholders. You don't actually have voting control over who sits on the board. You're just buying something that doesn't really represent true ownership and control in the company. So what's the fucking point?
Price down because it's undervalued so I can buy more. But that's not what happens. We go out and we get long and we get loud because everybody wants that price to go up because that gives them an outlet to sell it.
Oh, here we go.
I just don't see any difference between that and what WallStreetBets is doing. Now, I understand your point that an analyst, may have more training, more background.
What's going on?
Hopefully not more information, but at least be able to share that. And maybe somebody on
Did
a
CNBC lose
not,
feed? Like what happened?
Lying or pretending or whatever. I get the difference there, but at the same time, the goal is the same, to get long and get loud.
So, Mark, is there a world in which, GameStop can sustain a $20 billion plus valuation? And what is it then? Is it simply a store of value completely removed from fundamentals? Do you think that we're going to see that with some of these other names? And
it really comes down to, look, if somebody like Ryan Cohen, I don't know him at all, has had success with Chewy.com, and he put up a lot of his own money and bought 12, 13% of the company. Now, he's truly an owner. And owning that much stock, he put himself on the board and he put other individuals on the board, and he invested in a company that has about I don't know, 35% of its sales that are on e-commerce. And so they're doing all they can to get away from being a store-driven.
But Mark, you're talking fundamentals here.
No, I am,
right? You're talking fundamentals,
I'm telling you the
then
difference. No, because you asked me about the future of the company itself, right? And so I told you there was a reason why somebody bought the stock, right, and invested, I don't know how much money that Ryan invested to actually take ownership in the company and to actually influence the operations of the company. That's one type of buyer and owner. That's great. If you can buy enough for the individual trader, it's just about the narrative, right? What's the narrative? Is Ryan going to do a great job?
How do you justify that? I guess my original question is, how do you justify a $20 billion plus valuation? You're talking fundamentals, but when you're talking to the WallStreetBets group, you're saying that it can keep going up and up again. What is that based on?
It's based off of supply and demand, like anything else. If you bring
so then my question is, what is GameStop? What is GameStop? Is it just a store of value at that point?
Yes, like any non-dividend paying stock, right? Look, the idea of having $1 trillion market cap in a company would have been laughable 5 years ago, 10 years ago. The idea that a company's market cap would go, $1 trillion company's market cap would increase 50, 60%, or $600 billion, and more than, almost any other S&P stock in months would seem incredible.
Let's talk about Tesla.
Say the fundamentals could never support that, right? It's supply and demand. How many buyers and how much money is chasing? And now, with low interest rates, there's so much money chasing. And this is nothing new, right? It's just nothing new at all. And there was a time when if a company went from $100 million market cap to $700 million market cap because of all the supply and demand, and who knew where the demand came from, it was just, wow, that's crazy, but it is what it is. Now, because it came from a message board.
No, I'm not.
Fuck you, anti-union scumbag.
A message board. I appreciate what they executed in the short squeeze and the foresight it took to recognize kind of the discrepancy there in the degree of short selling that was going on and what was likely to happen. But I want to go back to fundamentals because Apple just had a $111 billion revenue quarter.
Yep.
Right? $111 billion revenues in a quarter. The iPhone margins are amazing. Yep. iPad is surging. They're attempting this vertical effort with chips in Macs, et cetera, et cetera.
Oh, yeah,
long game,
company.
long play with Apple. So, I mean, more than $1 trillion market cap on Apple in that sense is not surprising. But it also concerns me that we tend to have these conversations about
what about Tesla, though? What about Tesla, though?
When the markets and major indices are at all-time highs. We don't have these conversations when they're at lows. Then it's talk about dividend-paying stocks and fundamentals and a stock picker's market. So it's strange to me, and maybe give me a sense of the context of the time in which you're saying this, that these conversations tend to happen when things are looking pretty peaked and when, the long tail of retail investors are just piling into the market, when in retrospect, there often isn't a lot more upside.
Yeah, that may well be true. You could be exactly right, and this is the exact top. We don't know. But it still comes down to this. What are the ways that you can make money when you own a stock?
Goes higher, you get a dividend. That's it.
There's basically two ways. You can get a dividend, or you could sell it.
Or you can sell it to somebody else, yeah. Mark, when you're on Shark Tank and you're listening to a pitch, I mean, you eventually want to see the financials, right? You want to see cash flow. Why is it, I guess, why are equities different?
Well, because, one, I get to influence operations. Two, I'm looking to actually be paid.
Well, theoretically, you can do that through proxy.
Well, no, but let me finish, right? I'm looking to when I make an investment on Shark Tank, I'm not looking for an exit, right? I'm looking to make a profit based off of cash flows that they're actually going to pay to me. Notice I've always excluded, in this conversation, I've excluded dividend-paying stocks. Because dividend-paying stocks, look, if Apple with a $100 billion quarter, you want to see them raise their dividend. or continue to invest so that at some point in the future they might raise their dividend. But there's got to be a payback in my mind. So on Shark Tank, that's what I look for. Are they going to be able to write me a check out of their profits every month? And trust me, I've got a lot of companies from Shark Tank that do just that. And we work out deals with the owners, the entrepreneurs that say, entrepreneur, you own 70%, I own 30%. If we make $100,000 in cash flow that we don't need to invest back into the company, you keep 70 of it, I get 30 of it, and we gladly pay our taxes on it. You don't see that when you own a stock in a public company.
Yep. So if we're going to take the bit of our conversation, the practical parts, it sounds like you're saying two things. One is the regulators should have given Robinhood some political cover, yes?
No, I think the regulators should have explained up front what happens when you have your stocks held at a company that doesn't have all that strong a balance sheet relative to the number of customers they have. It's not that Robinhood is a bad company. It's not. It's a great idea. It's a great concept. It's well run. It's a good company. But they're not the first business to have too many customers. And there's other businesses that have gotten crushed because they had too much demand. And that's what happened to Robinhood. And the SEC should have made that clear that that was a risk when you are a customer of a brokerage that could find itself undercapitalized if the growth rates are too quick. And the transactions.
That's exactly what we were talking about earlier, Chad. I was talking about the undercapitalization earlier with Robinhood. We explained that earlier.
Said nothing. All of those brokerages that are in that position have said nothing. That's a problem, and that's unfair to all those investors who went in not having any clue that their broker might not have the capital to support their transactions. That is the piece that I don't think is being discussed enough, because that impacted the price of the stock, in my opinion only, as much as anything else that's going on.
Mark, you've said, you've given your advice to some of the retail investors that are currently holding GameStop, but I wonder, what do you say to the retail investor who wants to chase the next meme stock? Where do they get in? Is this, is this a practical method to apply to other stocks like this?
I mean, I forget exactly what I wrote, but I answered that exact question. And I said, look, we've all gotten burned. You learn from your mistakes, but the one thing you're going to do is you've got to do the work. You've got to do your research so that you know all you can. And you also got to realize that day trading means all day trading. You have to always be on looking at what's going on. That's what I told him.
How do you do your work? How do you do your work, though? Like, are you not looking at fundamentals because they're getting so detached from that? Like, seriously, what is the practical way to do your homework when looking at these stocks that you're not sure what moved them other than supply and demand?
Okay, so let's look at GameStop. I mean, look, I can make you just as strong an argument that it's very strongly attached to fundamentals, right? So here, I just pulled up their holiday sales report. They did 1.77.
At what valuation?
Well, but let's put that aside for right now. They did $1.7 billion in sales in the fourth quarter, and 34% of that was from e-commerce. So let's just, for easy numbers, they did.
I can't believe they just said meme stock,
in e-commerce in one quarter. So with Ryan Cohen coming in, let's just say that he can continue to increase that. So you have a $2.4 billion going to $3 billion sales company. Are there other e-commerce companies that are valued at 10 times sales? Yeah. Are there other e-commerce companies valued at 20 times sales that are growing like that? Yeah. So the narrative is there. If you want to talk fundamentals, you can create that narrative.
As people
fundamentally, what he's talking about here is what's known as a margin expansion. And
calling in, you always give us something to ponder and think about. Thanks, Mark.
I appreciate it, guys. Thanks.
Mark Cuban. All right, we'll see you later as we watch both GME and the S&P, which has gone to its best one-day gain since November 5th. Squawk Alley's back in a minute.
Oh, my goodness. All right, so what Mark was basically saying is stocks don't actually give you control and they don't pay you cash anymore. So they just go up based on supply and demand, which is the greater fool theory. There's just an infinite supply of money that's being pumped into the market. It's totally detached from the fundamentals of companies. It's just, quote, supply and demand. He's saying that stocks right now in America are just speculative instruments And if that's the case, then you have to ask, where's the new money coming from? And right now, the answer is the Federal Reserve. But is that sustainable? Can that continue forever? And it seems the market can always remain irrational longer than you can remain solvent. GME is trading pretty much about 10 points lower where they started the day, down 100 from yesterday. Also coming for the middle class getting conned by trading companies. Here's 30 cents per game, and I'll give you $20 for your 2-week-old PlayStation 5. Money is by its very nature speculative. We just trick ourselves into thinking it's real. Are we talking about stonks all day? No, we're not talking about stonks all day, but we're just watching these meme stocks crash. And there's common stock, preferred stocks, and there are some stock options which are tacked onto bond purchases at times. There are other types of stock, but these are the main types. Stock options relate to those underlying securities. Are you going to review the entire AOC vid? Because Hassan did. He talked all over it, but the cat's got ADHD. I mean, you have to talk over it to, like, do a react video to it. So, while we're going to keep our eye on these things, don't worry. How's Doge doing? Doge is... How's AMC doing? Oof. AMC's at 6.9. Nice. If you want more leftists on this platform and other platforms that actually go into deep dives about issues like finance and electoral politics, you're never going to find a better stream than this one. Here's some things you can do. I'm posted YouTube content constantly. We had another Jimmy Dore video. We had a not safe for stream debate with conservatives where Vosh and I and Denims debated with a bunch of conservatives about voter fraud. You have the dumbass takes of uniting with fascists. Get in there. Get in there.